Hello, this is Alex Fensky, the lead agent for the Chicago Southland Homes team at Keller Williams Elite, and I'm here on June 5th, 2023 to give you the June market update. We have, as always, some stuff that hasn't changed and some stuff that has. So we'll get right into it here. We're going to cover some housing market statistics like affordability, supply and demand, and pricing. We're going to talk about mortgage rates and the upcoming Fed stuff, and we'll just talk about a couple of pieces of generalized advice. The number one piece of advice, though, is even what I'm going to go over with you now, which is much more accurate and specific to our market area than anything you were going to hear on the news, is still way too general to describe the micro markets that are all over the place for real estate. I could be on appointments within an hour or two of each other where the market is very, very, very different from just those two places. So take all this with a grain of salt. Understand that it is general, but it's better than what you hear on the news station. So with that said, I'll go into our data sources. Number one is InfoSparks. That's a data tool through Midwest Real Estate Data LLC, which is our multiple listing service. And for my mortgage data, I use mortgagenewsdaily.com. That's a public website that you can use as well. So let's get started. Number one, the National Association of Realtors Nationwide Housing Affordability Index fell by 5 points from February to March. March is the most recent data we've got on that number. It takes them a long time to compile that particular metric. So it fell a little bit, which means housing became a little less affordable from February to March. And that was thanks to a slight increase in home prices, a slight increase in mortgage rates, and a little bit of an increase in household income, but not as much. So income grew a tiny bit, prices and rates grew a little bit more. Therefore, overall affordability, or the amount of money that the typical household earner has to use to pay the mortgage on a typical home, became a little bit less desirable. It actually fell back under 100, which is sort of the baseline index. But the good news is the Midwest region, our index, though it fell 10 points, it's still at 133, which makes it by far the most affordable region in the country. With that said, let's start now talking about all the May numbers, which are hot off the press from our multiple listing service. So let's start with supply. In terms of the number of people that are selling homes, it is down drastically again. A couple of new records we're looking at here. There were actually 25% fewer homes listed this May compared to last May. So let's take a look at new listings. Let me zoom in on we'll look at last 3 years here. Here we go. So you can see here in May, 14,702 new listings came on the market. And that's not where that graph usually is. In fact, that is the fewest new listings of any May that we've got on record. If I zoom out here, our numbers through the system go back to 2008. It's the fewest on record. Similarly, the total number of homes for sale continues to drop at a time of year where it shouldn't be. It should always be going up during this time of year. If you look every spring, number of homes for sale goes up throughout the spring. Very, very consistent pattern. There's only two exceptions. One was in the middle of COVID when everything shut down. And then number two is right now. This is the only two times that the number of homes for sale in our market has actually shrunk in the middle of spring when it should be growing. It's the fourth consecutive all-time record low. This is, again, as far back as we can go. 4 months in a row, we've set records. So not exactly the kind of records we'd like to be setting right now, but there's a plus side to everything. There's actually, for reference, there's only 1/3 as many homes for sale today compared to March of 2020. So, that was the last time we had some kind of a normal market. And there's only 1/3 of that number of homes available right now. So supply is down drastically. Now, demand is also down. We measure demand by pending contracts and closed sales. So the number of homes that are under contract at the end of May was 11,434, is down 15% compared to last May. So that's a pretty good chunk, but it's not down as much as new listings. Those were down 25%. So closed sales down about 23% compared to last May, and definitely a low number here. demand overall is softer than it's been for basically any time in the last 10 years, which was our entire last market cycle. Beginning of 2013 is when we finally turned the corner after the Great Recession. So to be at demand that's as soft as it's been at any time in the last 10 years, but to still be in a seller's market, and that's where we're going here in a second, is thanks only to the fact that there's extremely limited supply and new listings are down so much. So remember when I said that there was like a plus side to everything? It's not great that we're struggling with a record low housing inventory. It makes things difficult in the marketplace. But at least the bottom hasn't fallen out of the market. Prices are not plummeting, and none of those things are happening. And normally, if supply continues consistently and demand drops off, you would see a lot of prices declining and buyers market conditions and things like that are overall not really great for the market. So, so long story short on that is that demand is down, but supply is still down more. When we merge those two metrics together, a couple of the numbers we look at is the months of housing supply. This is how long it would take for buyers at the current pace of buying to gobble up all the available homes for sale. And on a monthly basis, it's at 1.5. If I go back and say rolling average, it kind of eliminates the seasonality. It's stuck at 1.8, where it's been all the way back to beginning of January of last year. And for reference, this back here is January 2020, between 4 and 4.5 months. Typically 5 to 6 months or 5 to 7 months of supply is considered a balanced market. So if you go back and go, well, geez, when's the last time we were there? Last time we were above 5 months of supply was in early 2016. And going back to 2013 during the recovery, we were shrinking down from over 8 months of supply. Going back all the way down to 2008, you can see we're almost 18 months of supply at a certain point, but it just keeps going down. We'd like to see this number come closer back to balance, but it's going to take a while. One other thing that we can look at for the blend of buyers and sellers to see what's shaken out in the wash is the number of days to contract. So if we look at the median days to contract, it's standing at 10 right now. It's been anywhere from 8 to 10 going all the way back to July of 21. So that's been very stable. It actually has not lengthened. Your supply demand relationship, despite lots of other things in the market changing, these things really haven't changed at all. It's more so the number of transactions that has changed the most. Here's another thing that changed: pricing. Hold on. Whoa, that chart's crazy. Let me zoom in a little bit on that. So in terms of our median sale price, look at this. It flattened out, depending on how much you're rounding, July or August of 2022, almost 12 months, it has been completely flat after a wicked run up there. Let me zoom out a little bit and we'll take a look at where prices have been prior. That's back 5 years. Here's back 10 years. This was the end of the Great Recession for housing in the Chicagoland area, beginning of 2013. And so if I go all the way back, again, for reference, here we are in January 2008, 4 years of falling, about a year of flatness, and then all the way up since then. You can see that in 2019 and in 2020, it looked like we may end up sort of cresting the market and having another cycle. COVID disrupted everything, and instead of the market being soft for about 2 or 3 years, it raged. But here we are, flat again. By the way, it is crazy to see where you've got a seller's market, record low inventory, 1.8, 1.5 months of housing supply, and prices flat. That's the same amount of supply. If we're looking for reference, if you look at months of supply, it's actually lower than it was during the spring and summer of 2021. So summer 2021, it was in the twos. We've been at 1.8, solidly under 2 since then. But prices were going up so fast during that time period, and they're flat now. And that's because the housing affordability thing. That's what's caused prices to flatten, despite there being not enough homes for the buyers who want one. So that's it for those numbers. Let's take a look at mortgage rates. Mortgage rates, we are on Mortgage News Daily. 30-year fix is running at 6.89%. It's a little higher than it's been for the last 9 months or so. It's a little higher than like the average of that time period, but it's not the highest it's been. It's been in the sevens, including just a couple of weeks ago. We pushed up into the sevens and came back down a bit. It is so it's towards the higher end of the range, but still within what is now the normal range. You're getting right around 6.5% on your government-backed loans, your FHA and VA loans. There is still no discount, essentially, for a 5/1 ARM, on average 0.03%. So basically no discount for an adjustable rate mortgage, and you're getting about 0.6% or 600 basis points for a 15-year fixed mortgage. Not a massive discount, so most people probably are going with the 30-year fixed here today. In terms of the Federal Reserve is going to be meeting again June 13th and 14th. They are widely expected to keep their target rate the same, which will be the first meeting they've done that since the beginning of 2022. They've raised it by a quarter or a half point or one time more every meeting since then. So they're expected to keep that rate the same and probably continue keeping it the same through the end of the year as long as inflation and the labor market don't get too out of control and those continue to moderate. A lot of people are actually expecting that there may be at least one interest rate drop prior to the end of the year. But that's a long ways to forecast. So we're not going to make any bets on that. So at the end of the day, what does all this mean to you? What do you do about all this? Well, number one, if you're a seller, understand that the market is still on your side. You still have short market times. You still have not enough inventory available for the buyers who are out there. So those things are in your favor. What you can't do, though, is you can't bank on pricing optimistically or thinking that you can't do any wrong and you just throw a house on the market and it sells automatically. It's not that environment at all. So you really got to still take pricing really seriously. Listen to your agent about getting the home prepared and staging, photography, and all that stuff to put the home in its best light. On the buy side, you still got to compete. And as I've been telling everyone, if you're one of the few buyers who's able to compete on price because you have more cash on hand or whatever the case may be, do it. Because as you can see, most people are not able to compete on price right now. They can't throw that extra $10,000 or $20,000 or $30,000 on top of the list price in order to win a multiple offer situation. So if you're one of the people who can, you'll give yourself good odds of winning. If you're one of the many people who can't, then you got to compete on everything else. Every other little piece of the terms that we can play around with as a buyer, you're still going to have to compete. And if you can get with an agent who's able to identify property that's not on the market or not on the market yet, you might be able to make a little bit easier go of it because it can get a little tough out there when you're in a lot of multiple offer situations and things are moving really, really fast. That's also what I'd love to do is be able to talk with you about the specifics of what you're planning, whether you're selling a home, buying a home, transacting investment property. I'd love to talk with you about what exactly you're up to and where so that we can help you make an informed decision. So go ahead and follow us on any of our social media, drop me an email, give me a phone call, and I'll be happy to help you. Thanks a lot.